Hi, welcome to the Market Alert for Wednesday, the 4th of November 2015. Starting off in yesterday's 5-minute chart, we can see that we had two buy signals to the upside there before we got into the quiet session. However, you may not have taken the second one as it was so close to the quiet period setting in there. And again, this did result in a profit, as did the first trade, as the market traded up to the psychological level of 17,900. So actually this is the 17,800. See the market driving through this at the beginning of the session, and then the 850 up to the 900 and then to the 950 before the market started to return. So the first part of the session really just giving the profits yesterday, and as I've said before, and I'll continue to say, if you have profits in the first half of the session, why bother with the second when you can go off and do something else instead of sitting here looking at the screen. So a profitable session yesterday. Of course, we had the central bankers being wheeled out. If we have a look at the daily chart, you can see the market going through the 17,900 level, which is drawn in there. The market just sitting on that at the moment. So today we've got a whole stack of news. Draghi speaking at 8 AM. He's being wheeled out. The central bank circus continues. We've got Brainard at 10:30 AM. So he's up early. And the biggie of the day as well, we've got the non-farm employment. That's out at 1:15. Trade balance, ISM, that's out at 3 PM. And 3 PM, you don't want to be in the market. Yellen, the big gun, is going to be out. She's testifying at 3 PM. She's going to be talking for at least half an hour. So expect some volatility then. Dudley's being allowed to speak at 7:30 as well. So it's a central bankers fest today, anyway, to describe it. Keep the collusion and the illusion alive and kicking that the global markets are fine. No doubt she's going to be hinting at increasing interest rates in December, and everything that I've got I would stake on that it won't happen, as for the reasons I've spoken of before, purely and simply because it will double the debt repayment. It makes the bonds that have been the 4 trillion that's on the Fed's balance sheet from bailing the banks out will be worthless. So absolutely not a chance. And if she doesn't do it in December, then she's certainly not going to do it in 2016, because it's an election year, and never in the history of a US election have interest rates risen. And no doubt Obama's been on the blower as well, saying, listen, Janet, if you don't mind, I'd rather be playing golf at the end of this and not have it on my watch that the US economy actually collapsed. So if you don't mind, can you just keep pretending you're going to increase interest rates, but actually never get around to doing it. So it'll be an interesting month of December to see if she does, and if she does, well, that's it. You can expect the derivatives market to blow up as well. That's sitting somewhere in the region of 70 odd trillion just for Deutsche Bank, 70 trillion for Citibank. Oh, it just goes on. The banks are more leveraged now than they were in 2008, and that's where the money's gone from the Fed to their Wall Street mates and banks, not to where it should have gone to. And of course, that's just all it's done is created a bigger asset bubble. And while the Ponzi scheme remains intact, we can expect new highs, and we can also expect the all-time high to be taken out as well, because that's how the game is playing out. And until we get down to those levels in the implied volatility of 10%, then we will continue to the upside. 11.91 for yesterday, and this in the chart there you can see now dropping nicely, and every time we get down to these levels we get a major correction to the downside. So just hang in there. We're going to see a lot of fun going into December and certainly January. And if she does and increase interest rates, oh blimey, then the party will really begin when it comes to carnage to the downside. There's no doubts about that. You'll see an initial rally in the market because of this so-called in inverted quotes Normalising the market. Absolute nonsense. We've been on emergency rates now for 8 years. There's no normal market anymore. There is no economics that actually has ever been. There's no theories at all for what we're experiencing at the moment, because we've never been in this situation before. Just keep printing the money, hope it lasts, and keep the illusion alive. So interesting times. Couldn't be more interesting actually to be trading the financial markets than what we have at the moment. Right, that's it for today. Brief to the point. I will see you in tomorrow's edition. Oh, just before we leave, today's market alert, just to let you know, there's going to be an update out in the software. We've cured the problem of the historic signals not matching the live ones. I just want to give it one more day of testing today, and then I'll release this one out too. So it cures the problems that any of you have actually had with that, and there has been one or two as well. So just to let you know, that's all sorted as well. Right, that's it. I will see you in tomorrow's edition. As ever, thanks for watching, also for your support. See you in the next one.